let's go back to some mathematics. Larry said, and I know he misspoke because he said total gold market was 400 trillion. No, total financial assets in the world are between 400 trillion by Larry's methodology and 900 trillion by my methodology, because I'm a debt guy. I put all debt in there. Think of enterprise value versus market cap, okay? Nonetheless,
gotcha.
We're splitting hairs when Bitcoin is 350 billion of a potential total addressable market somewhere between 400 trillion and 900 trillion dollars. We're getting too smart by a half in terms of how much Bitcoin could address this whole market. So I'm not going to argue with Larry over that. The only thing I'm going to agree with him on is that it's a spiral that cannot be solved. You have to print money. It is the error term. It's the only way of solving this runaway debt spiral where your debt burden is building organically because of the coupon on the debt. Okay, guys? If you don't understand that, you failed grade 11 math. So everybody's running around trying to split hairs. And the reality is quantitative easing infinity, QE infinity, is built into the mathematics. It always has been, and the Fed can pretend they're going into QT for the short term. It doesn't work in the long term. So there will be a solution where the Fed has to blink and admit, we have to print forever. So don't take your allocation to Bitcoin out of your gold basket. You take your allocation to Bitcoin out of your fixed income basket, because fixed income is a contract. And it's a debasing contract. It's built in fiat, and fiat is programmed to debase. So what are you going to take your allocation to Bitcoin? I don't care if there's Bitcoiners that don't like gold bugs and gold bugs who don't like Bitcoiners. You guys are missing the bigger picture here. It's so much bigger than the combination of gold and Bitcoin. It's about a Fed projection where they think it's normal that they're going to be able to borrow 4 times their revenue base or their GDP. That's going to solve this debt spiral. This is what blows me away, Sam. We have never been here before. The point of no return is past, so we cannot compare this anywhere in history. It started with a financial crisis. We rescued the system. First time in my life was the Latin American debt crisis. That's the first time we kicked the can down the road. Then it was long-term capital management. Then it was the great financial crisis, and then it was COVID, and now it is over. You cannot compare this time to any other time because our debt burden is just so darn large. The mathematics don't allow it to be solved any other way. So we can look back to different periods, but the reality is we've never been here before in terms of a global debt burden that is so large compared to global GDP. And you can break that down by country, and you could say, oh my goodness, here's the crazy thing. In the end of World War II, the USA had a debt burden, plus the federal debt, that was right around 100% of GDP or 1 times. Hey, the USA was a trade exporter then, a global exporter. It doesn't work when you are a global importer. So again, there's no other time in history, because we have just been so irresponsible in building the debt burden. You can't compare it to any other time. I don't want it to go kaboom, but unless they keep printing forever, it goes kaboom. So there's one solution. Infinity, QE infinity, and we're going to pretend inflation doesn't exist because we're going to rewrite the definition of inflation to bring it down to this mythical 2%. Guys, inflation compounds, okay? Just because you can claim victory by bringing some stupid number down to a 2% annualized today, based on new mathematics, doesn't mean that you get out of jail for free for increasing it 15 or 25% annually on an equivalent basis a couple of years back. I have never been so sick to my stomach of the lying and fibbing that goes in. And anybody who's done any mathematics understands this, except they're not allowed to say anything because Ray Dalio gets on TV and says he doesn't think the solution is going to be Bitcoin, and then describes what he thinks the solution is going to be, and he fucking describes Bitcoin. Like, this is so asinine, and I've never seen anything like this. So we are living in clown world 3.0. Okay, and the people running this clown world need to be challenged by the people who understand mathematics. And it's not difficult math, guys. It's grade 11 math. So please keep challenging these people. They're lying through their teeth. It cannot be solved any other way.
Yeah,
Larry, you got anything to add?
Yeah, not really. Foss pretty much covered it. Look, he's right. The problem's at the sovereign debt level, which is bigger than all the prior ones. You asked the questions, because we lived through them. How does this remind you of, the LATAM crisis or LTCM or the bursting .com bubble or '08? And the answer is yes. I mean, we've seen this movie before. It's bigger, it's deeper, it's more pervasive, it's worldwide, and it's not in any one sector. I mean, when the .com bubble burst, the rest of the economy was healthy. It was just the tech stuff that got hammered. Of course, it was an important enough part, it dragged down the whole economy. U.S. housing was not worldwide commerce. I mean, this is at a sovereign level, so it's much bigger, and it might take longer for it to play itself out. I mean, I must say, one of the things that surprised me is that it hasn't come apart by now and that it's taking longer. But, then I thought through it all and I realized, when you grow the money supply by 40% in 2 years, which is what they did, that's a lot of liquidity. Do you know what I mean? And so there's still kind of a lot of echo boom around. And I think we all know, at least those of us who are watching this stuff carefully, we know where this is going. I mean, there's very little doubt. It's Greg's point that it's math, but we don't really know the rate at which it's going to get there because there's just so much free money still flowing around. And, it's going to take a little while.
Or we can solve it that way too, Larry, right? Let's be clear. We can solve it that way too by just continuing to print money, and then the only outcome is fiat debasement. Okay, so prepare for fiat debasement.
And I was talking to one of my kids today, and I said, look, I honestly, I think probably, inflation will be bad, but I think the healthiest way out of this whole thing for the entire world might be to actually, keep the economy running and let the inflation run hot until we can, inflate away this debt burden, because, the alternative of everything blows up and we get an outright collapse, that's going to cause a hell of a lot of pain as well. So, it's unclear because we know the policymakers are trying to walk that middle line between extreme deflation and extreme inflation. But to the degree there is a middle line, it has to be an inflationary one because of what Foss talks about. The mathematics dictate that, right?
Yeah.
And be careful though, guys. Sorry, Sam, just to add, the only way that scenario works where Larry says we inflate away the debt burden is with a degree or a measure of financial repression where yields are kept artificially or manipulated below the level of inflation, which is a Japanese style solution. And we know that doesn't work long term either. So it's just such a sickening prospect. So in that case, bonds are about the worst investment you could ever make in your life. And that being said, there's people who think that bonds are now a great purchase because, we're almost taming the inflation beast. I'm not saying short bonds, but I would not use bonds as a store of value instrument over time compared to other hard assets. Bonds are soft assets. You need to store your money in hard assets.
I think that's the big deviant perception that I see in the market right now, Sam, amongst professional investors. That people still think we're going to go back to that la-la land we were in for 40 years of deflation. And we're not, in my opinion, we're not. This is the 70s on steroids. There is going to be a lot of inflation in the next 10 years. And that's going to have enormous implications for all investment classes. That's going to be very positive for Bitcoin and gold.
It's worrisome to me because I ask myself, like, who owns all these bonds? And to me, it's more older folks, right? Like retirees, pensions. Have they woken up to this change at all? Because it just worries me thinking about these retirees who think that they're safe in these risk-free assets with bonds. And there's this purchasing power risk. There's this real inflation risk. If we are entering a period of financial repression, when are they going to realize this reality, that we've had this huge shift that has occurred? Is it just going to take a long time for them to realize this?
No, I think sadly they're going to realize it in the next couple of years because,
Okay.
right now we're in a deflationary wave because Powell's trying to be, Volcker. But, we'll get, as Lynn also said in one of her great tweets, I have no doubt they can get the inflation down. What they can't do is keep the economy running, get the next wave of growth going without another wave of inflation. The notion that they're going to solve the inflation problem, that's the error. That's Greg's error function. You can't taper a Ponzi. You've got just way too much debt that will collapse. Already the government itself is in a doom loop. The run rate on the government interest expenses is approaching $1 trillion a year. Total tax revenues are $4 trillion. So it's 25% of tax revenues, and that's up markedly. A few years ago, that was 300. So that's more than tripled. And if interest rates go from 5 to 6 or 7, it's just game over.
It's already over, over even with interest rates at the current level. So I guess we don't have to get too fancy, but it's a great question, Sam. Look, the people that own it, everybody, because everybody has a 401k that's managed by some sort of advisor who always goes by the 60-40 rule. 60-40 has always worked. You know what? 60-40 has worked for the last 40 years because the 40% that were in bonds were invested starting at rates. It started at an 18% Volcker era inflation fighting level and went down to close to under 1% in the USA, and in some cases in Europe, negative. Now, try to describe a bond that's a saving instrument that produces a negative yield, and you've rewritten the laws of finance, okay? Because that's not called an asset. That's actually called a liability, where you have to pay money to keep your money in this instrument called a bond. Well, they managed to do and pull the wool over everybody's eyes for so long, but when do people wake up? When there's a crisis like what happened in Great Britain, and there was an investing strategy that was built on leverage and levering long bonds to increase their return. And guess what? When you lever something, not only do returns increase, but negative returns increase. So they lost 3 times their money. They lost 100% of their value over a short period of time because they were levered. So that's when people start figuring this out. And then they go to their government and say, please rescue my pension. And the government says, well, you know what? I want to get elected next year, so I am going to rescue your pension, and I'm going to pretend that it was a good thing to do, except what did they really do? They kick it upstairs to the coffers of the government. So every financial crisis always kicks the financial responsibility one level higher to the level of sovereign debt, the government. Well, guess what? There's no further place you can kick it now, and that's why we are where we are. You've consistently kicked the problem up a level to reside on the balance sheets of the sovereign debt nations. It's going to collapse, and it'll happen in stages. I'm not predicting the end of the USA Treasury market anytime soon, because you're going to have to see the end of the Canadian bond market before that, and you'll have to see the end of a lot of other bond markets before you see the end of the Canadian bond market. It'll start at the lower nations and work themselves up to the G7 nations eventually. And if the USA doesn't get its acting gear and put some Bitcoin on its balance sheet and also endorse Bitcoin as a store of value, while at the same time defending the US dollar as global reserve currency. So you'll have a reserve asset called Bitcoin. You'll have a reserve currency called the US dollar. It can still work, but you better start planning for it right now. Not happening tomorrow, luckily, because there's no other alternatives. But you'll see these weaker nations gradually fail, and you'll see a G7 country like Canada fail. And then I'm going to move to the USA if you guys have me, but Larry will be keeping me at the border, not allowing me to come down, because he doesn't want more immigrants into the United States. So you got to solve this whole thing, right? And it happens piecemeal. It happens in steps, but eventually everything always goes to the top rung of the risk takers. And by the way, there's no such thing as a risk-free asset anymore. And Luke Gromen friend of both Larry's and mine, writes about this often. U.S. Treasury debt is not risk-free. If it was, why are people then paying for default insurance on the U.S. Treasury bond? There are people that are out there buying default insurance on the U.S. Treasury bond. That's not a risk-free asset, people, because paying something for it. They view there being a very small but not zero chance that the U.S. Treasury defaults. So be very careful with a definition of risk-free. Does not exist anymore. Never did exist. It was just taught to us in school that it was actually that way. And then we go out and we start practicing this financial chicanery. And then we realize, holy shit, you can't keep printing something forever without eventually paying the piper. So you see it happen in third world countries, and then you'll see it happening in, developed countries, but not the USA. But the mathematics works everywhere the same way. Debt is a disease. It's a fiat disease. And this disease is starting to eat the carcass right now. So be very careful. There is no such thing as a risk-free asset, except Bitcoin. Except we don't measure it properly, but Bitcoin is actually your risk-free asset. Nobody has thought about that yet.